Hello everyone, Edward here. In this video today, I'll be going over an investment company that could give you the craziest gains, and that is Ark Invest. Since inception, their main ETF is up over 380% compared to the S&P 500, which is only 105%. That is 3 times the performance. I'm here today to go over all of ARK Invest's ETFs, so please stick to the end of the video to see if they are worth purchasing. In today's agenda, I'll first go through an overview of ARK Invest. Second, I'll go through all of their ETFs. And lastly, I'll let you guys know what I'll be doing with this opportunity. Before we dive right in, I ask you to please smash that like button down below for the YouTube algorithm. Thank you. We'll get into the first part of the video, which is an overview of Ark Invest. Ark Invest is an investment management company, and their focus is on investing in innovative and disruptive companies. Their CEO and founder, Cathie Wood, is the mastermind behind this company, and some say she could be the next Warren Buffett of our time. Some of you might have actually seen her on CNBC explaining her very bullish price target on Tesla stock. If you look at the chart here, these are the innovative platforms that they focus on investing in. I would highly recommend you to save this somewhere because this chart is a gem. She has an amazing team of analysts that are very vocal about their research as well. And all their analysts are separated into different categories of innovation, unlike Wall Street where they separate their analysts from sectors and companies. What I love about Ark Invest is that they're very transparent with their research. If you go into their website, you can actually look at some articles or also listen to their podcast to dig deeper into their thought process. All in all, this is a very reliable investment company that is backed up by research with a vision of investing in innovative companies. Now we'll get into the second part of the video, which is their ETFs. So their main ETF, ARKG, is their innovation ETF. The main focus of this ETF is to invest in the most innovative companies. They hold their most bullish companies in this portfolio. It is also their biggest ETF in terms of market value. If we look at their top 10 holdings, we can see Tesla, Invitae, Roku, Square, CRISPR, Teladoc, and many other companies. Tesla disrupting energy storage and also autonomy. Invitae disrupting mainstream medicine. Roku disrupting digital media players. Square disrupting the banking industry. CRISPR, which is disrupting healthcare. And Teladoc, who is disrupting telehealth. Side note, all of their ETFs have an MER of 0.75%, meaning every $1,000 that you invest into this ETF, there is a yearly fee of $7.50. This is a bit high compared to other ETFs, however, keep this in mind. They do have a team of analysts that are actually doing the work for you. Also, this is an active ETF, meaning they are trading daily to maintain the growth of this portfolio. Not day trading, okay, you gamblers? That is different. They only do this to take opportunities of dips and buying opportunities. Their next ETF is ARKQ, which is their autonomous technology and robotics ETF. What this ETF focuses on is autonomous vehicles, 3D printing, space exploration, and robotics. If we look at their holdings here, again, you do see Tesla at the very top of the list. This is one of their most favorite positions, and it is also my favorite as well. Next, we do see Protolabs, which focuses on 3D printing. And if we go to the bottom of the list, we do see Virgin Galactic, and they focus on space tourism. So all in all, this ETF is really great if you do have a bullish mindset on all these technologies. Next one on the list is ARKW, which is their next generation internet ETF. Companies that are in this ETF are heavy on AI, cybersecurity, cloud computing, and blockchain. And at the very first place of this ETF, once again, it is Tesla. And I wasn't joking when they're very bullish on it. We can also see Square, Roku, Spotify, and Teladoc in this portfolio. However, if you look at the full list of this ETF, it might get you interested because there's companies such as Facebook, Spotify, Amazon, Snapchat, Slack, Zillow, Zoom, Nvidia, PayPal, and you get my point. There's many well-established companies in this ETF, and if that's what you're looking for, this might be a great one for you. Next up on the list is ARKG, which is their Genomic Revolution ETF. If you haven't watched my video about Genomic Revolution, I'll link it up here. If it wasn't for ARK Invest, I wouldn't have known about this technology, so shout out to them. This ETF focuses on the genomic revolution, such as gene editing, therapeutics, and healthcare innovation. Their top 10 holdings in this ETF is Invitae, CRISPR, Pacific Biosciences, and many others. If you didn't notice that, Tesla is not in this ETF, alright? I highly recommend this ETF because the sector is still very small and it is still growing. So if you don't want to do the research, don't worry, this ETF has you covered. I believe that this sector will cure cancer and many other genetic diseases. Lastly, we have ARKF, which is their fintech ETF. This was initially part of their ARKW ETF, but then they realized that fintech is such a huge opportunity, so they decided to actually make a separate ETF for this. The main focus of this portfolio is to invest in digital wallets, blockchain, and mobile payments. If we look at their top 10 holdings, we can see Square, which is almost about 10% of the portfolio. If you didn't watch my Square video, I'll link it up here. I would suggest this ETF for anyone that are bullish in blockchain and also thinking that maybe fiat currencies will be a thing of the past. However, Bitcoin is not in this portfolio because that is traded on a different exchange. Cathie Wood did mention that Bitcoin should be in everyone's portfolio. I will be doing a video on Bitcoin, so subscribe and stay tuned. Now we'll get into the last part of the video, which is my thoughts on what I'll be doing with this opportunity. Disclaimer, I am not a financial advisor. Please do your research before buying a stock. Everything that I say in this video is for educational purposes only. I currently do not hold any ETFs from ARK Invest. However, I am very interested in adding ARKG to my portfolio. If you can't already tell, Cathie Wood and ARK Invest has a lot of influence into the stocks that I choose, because I 100% agree that investing in innovative companies is a really great way to grow your portfolio. When companies don't change or adapt new innovation, then they will fail. And we can clearly see it today. Uber disrupting the taxi business, Airbnb disrupting the hotel industry, Facebook disrupting all advertising, and Tesla disrupting the automotive industry. I really recommend this ETF for those that don't want to do months and months of research. For some, the downside might be the MER, however, I believe that it is totally worth it. However, keep this in mind, there was a recent article about ARK Invest being in trouble because a minority stakeholder wanted to take control of ARK Invest. If this does happen, I would try to stay away from this because a monkey will be operating the business. In the end, I think Cathie Wood is an intelligent investor. She has the potential to be one of the greatest investors of our time. Now we'll get into the bonus clip, which is tip of the day. And the tip of the day is concentration builds wealth and diversification preserves wealth. The more concentrated your portfolio is, the higher the growth. The more diversified your portfolio is, the safer your capital will be, because you're protecting against other sectors being hit inside your portfolio. This is truly important depending what you're looking for. For me, I'm personally looking for concentration, and that means I'm only picking a couple of stocks but putting a lot of capital into it. I am not trying to diversify by putting my money in 30 different companies. Note that ARK Invest compared to other ETFs are very concentrated. They may have many stocks, but they're dealing with billions of dollars, meaning they cannot concentrate as much as they like to. Imagine this, you have 20 stocks in your portfolio, and let's say 19 of them gave you a 12% increase year over year, but this one stock gave you a 100% return. Now imagine putting the capital from that 19 companies into that one stock instead. Then your whole portfolio just went up 100%. This is what concentration is. Yes, the downside to this is diversification. However, if you do your own due diligence and your research, then you should have a high conviction and be comfortable putting as much money as you can into that stock. I'm going to tell you a secret here, and that is diversification is BS. And it's not just me saying it, investor legends such as Charlie Munger and Warren Buffett have said this. Charlie Munger said that any idiot can diversify a portfolio, and Warren Buffett said that wide diversification is required if you got no clue what you're doing.
But once you're in the business of evaluating businesses, and you decide that you're going to bring the effort and intensity and time involved to get that job done, then I think that diversification is a terrible mistake, and to any degree. And I got asked that question when I was at SunTrust the other day, and if you really know businesses, you probably shouldn't own more than 6 of them. I mean, if you can identify 6 wonderful businesses, That is all the diversification you need, and you're going to make a lot of money, and I will guarantee you that going into a seventh one is going to, rather than putting more money in your first one, it's got to be a terrible mistake. Very few people have gotten rich on their seventh best idea, but a lot of people have gotten rich on their best idea.
I'm surprised that nobody knows about this, and this is such a gem. That wraps up for this video. I hope you learned something new today. Please smash the like and subscribe button and turn on that notification bell. Thank you for watching, and I'll see you guys next time.